Welcome back. I'm Pratap here. Today is 27th November 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. So this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday end of the day report, we identified 7 high liquidity zones from daily and 75 minutes time frames. And we got very good trades today. The first one is Shree Cement. This is a 75 minutes high liquidity zone. Our NeoStock software identifies this zone as a rally, 3 base candles and a rally candle. And this 75 minute zone is fine tuned with 15 minutes time frame. Here you have a 15 minute zone. So here you have a rally candle. So this is the rally candle as a leg-in. And then you have a base candle. And then again you have a rally candle with a hidden body. At the hidden body you get a rally candle. And this 15 minutes zone, rally base rally, is again fine tuned with 5 minutes time frame. So look into the 5 minute zone here. You have a drop candle as a leg-in. You have 1, 2, 3 base candles. Again a rally candle with a hidden body. So this is the fine-tuned 5 minute zone. So today prices entered into this fine-tuned 5 minute zone. So in this candle, because this is the morning 9:15 candle, mostly you may not take the trade. Look into the 1 minute, you will get clarity. So this is morning 9:23 candle. Probably you would have got a trade either, or this is this is a clear trade at morning 9:37 candle. Let me go to the 5 minutes time frame. Morning 9:37 we got this trade. After that finally prices reached our 15 minutes target at a 13:15 candle. And this is a 15 minute zone. We have a drop base drop and reached, and after that this zone is further violated. Anyway, calculated up to this 15 minutes target zone, and until this 15 minutes target we got a profit. Let me open the Excel sheet. Shree Cement has given 10,315 rupees profit, which is a 9.3% ROI as per one futures margin cost. So excellent trade. A clean and neat trade as per the fine-tuned zone. Because prices entered inside the zone, definitely all our trades would have been executed from this stock. And next one is a Petronet. This is also a good trade, but you need to add some entry buffer. 0.1% entry buffer you need to add to get the trade. From type 2 proximal. If it is a type 1 proximal entry, it could have been a clean trade today. Because we reduced the risk, so we are adding a 0.1 that is within the type 1 proximal. But this is a 75-minute zone. First of all, this is a this is a daily zone, not 75-minute zone. This is a daily zone. We have a rally, base rally. Sorry for my mistake. I was showing you 75 minutes chart. This is the one. We have a drop, 3 base candles, not 3, drop 1, 2, 3, 4, 5 candles and rally candle. This is how our software identified this zone. And this zone is fine-tuned with 75 minutes time frame. Identified 2 order flows. The first one is, this is the one, rally, base, rally. There is one more, second one is also there. Drop, failed ERC candle, base, rally. And this rally, base, rally is the first one. Drop, base, rally is the second one. And this is the third one. You have a failed ERC candle here, rally. You have 1, 2, 3, 4 base candles and a rally candle. And these 3 75 minutes order flows are fine-tuned with 15 minutes time frame. Here you have a 15-minute zone. You have a drop, base, rally. You can also consider this drop, 3 base candles, rally. That is also okay. And second one, rally, base, rally. And here again you have rally, base, rally. This is the 15-minute zone. And the 5 minutes time frame, we have a drop, 1, 2, 3, 4 base, 5 base candles and a rally candle with pro gap, and you will be adding hidden body. This is the type 2 proximal. And blue color line is the entry buffer, 0.1% entry buffer. And this is not having a proper 5-minute structure here. But this entire 75-minute zone is having a rally, base, rally as an origin. This 5-minute zone as an origin to this fine-tuned 75-minute zone. And moreover, this zone is acting like a high liquidity zone. Multiple times this zone has been already tested. This is the first time came very close. Probably if it is the type 2, this zone might, type 1 proximal, this zone might have been already tested. This is the first test. But I have drawn type 2 proximal entry. And the second test, third test, fourth test, fifth test. And this is the time the 75 minutes fine-tuned zones will be created. So until this zone is violated, you can plan trade if prices are entering. And then here also you have a drop, this failed ERC candle as a leg-in. You have 1, 2, 3, 4, 5 base candles and a rally candle. Follow through. This is another fine-tuned 5-minute zone. So these are the 3 order flows we identified. But obviously we take our first trade from this. If this is violated, we would have planned on the next one. If this is also violated, we would have planned on the third one. But anyway, the first one is a fresh zone. This is a drop, base, rally. And today prices entered into that zone. Near the zone we added entry buffer 0.1%. It went inside that entry buffer. Definitely we got a very good trade here. And here we have a 15 minutes target. We have a drop, base candles and a drop. And the last minute it reached the target. I know most of us might have exited somewhere here. This is the ideal. Let me draw a horizontal line, because a lot of time the prices got resistance at that area. Probably somewhere here, because the market timing is getting completed. It's very close to the last hour of the market. Generally what we do, intraday traders, 1 hour before the market closes, we will exit the trade, the blue color line. Okay, for high liquidity zones point of view, it reached the target. And until this target, what is the profit it has given? Petronet has given 7,125 rupees profit, which is 7.4% ROI. There is one more stock, Ultratech, third one. This is also a 75 minutes high liquidity zone. This rally base rally has been created. Sorry, this is a daily high liquidity zone, not 75 minutes. Sorry for my mistake. This is also a daily zone. Drop base rally. This daily zone is having a 5-minute zone as a horizon. Previously we took a trade from this zone. I remember. Here we have a 5-minute zone as an horizon. Rally base rally. In this zone, it picked up the orders and the entire daily zone was created. Recently, I think few days back, we took a trade from this zone. Our HLQ zone supported this. I think probably somewhere here, or maybe this one in this candle. After that, prices moved. While moving, a new 75-minute zone is created. See, recently, I think in this candle we discussed about this. At that time, a rally base rally created, a 75-minute zone is created. This is the fine-tuned 75 minutes. Rally 1, 2, 3, 4 base candles and a rally candle. And this 75 minutes area is fine-tuned with 15 minutes time frame. We have a 15-minute zone, drop base rally, 15 minutes fine-tuned zone. And this 15 minutes fine-tuned zone, again you have a 5 minutes fine-tuned area. You have a drop, 1, 2, 3 base candles and a medium size candle is also part of the base, medium size leg candle. Anyway, it is having 4 base candles and a rally candle. Almost the 5-minute zone is same as 15-minute zone because same level order flow has been there. And today you see it reached this zone and we have a drop base drop. This is the target zone, 15-minute zone, and reached this level. It looks like it has given 7,550 rupees profit as per one futures margin cost, which is 7.7% ROI. All these are all excellent, right? But unfortunately, you can't take this trade. Okay, high liquidity zone's point of view, it did the job. Prices reached this fine-tuned area and pushed up to this 15 minutes target. So why can't we take this trade? Let me go to the 15 minutes. Here you have this drop base drop. This is the target. And after that, see how sharply prices moved. Even this zone is also violated after that. So why can't we take this trade? The reason is the risk. The risk is beyond 2%. What is the maximum expected risk? Only 2%. Okay, because if the risk is beyond 2%, what you have to do? You need to reduce the risk by adjusting your entry. That means by reducing the price, you need to plan your trade. Maximum, suppose if your maximum accepted risk is for 2%, you can't go beyond 2 as per our theory. So up to 2% you will adjust. Suppose you, even though theory accepted maximum 2%, but your personal point of view, you can accept only 1.5%. Further, you have to reduce the entry. That is the way you have to plan. If you reduce, today you might have missed the entry. You would not have got this trade. If you are very sure This zone is very strong, it is having strong order flow, you cannot miss this entry, then still you need to accept this risk. What you have to do? You can't take the direct trade. You have to plan position size. You have to position size your trade. Risk is beyond 2%. You can accept, you need to position size. By doing position size, you reduce the risk again. Instead of buying say for example, 1000 shares you want to buy, instead of 1000, you will buy only 750 shares. That way you will make sure you will adjust up to 2% risk or 1.5 risk or 1.2, whatever the risk you accept. Till that level you accept and you reduce the number of shares. That way what will happen? Risk will be reduced. Of course, it reduces your profit margin also. But if you are F&O trade, F&O you can't manage the risk with one futures lot. Probably if you are planning to buy some 6 or 7 futures, probably in that futures you will position size. Instead of 7 futures, probably you will take only 5 futures or 4 futures. Up to the level you manage the risk. That is the only chance you have to plan this trade. But according to our high liquidity zones point of view, today fine-tuned zones, they worked very well. In all the 3 stocks, the fine-tuned zones prices reached and moved up to here. But this is not our practical trade. Just I want to explain. I have registered this. Let me delete this. I am going to delete. Because this is not a practical trade. Because these values are calculated based on one future's margin cost. But when you do position sizing, you won't get this much RR. Why? Because your money is blocked. You can't release the money. You are taking a less number of stocks for the same capital and you are blocking your capital. Why you need to block the capital, remaining capital, that I clearly explained in our lesson, I think 18 or 19. In one of these lessons, I explained position sizing. Please listen that training lesson. Why you need to block our funds. Why you should not release until the trade is completed. That is the only way you manage the risk. That is the only way you achieve position sizing and get the results. Just I want to revise you that make you people understand the importance of position sizing. I kept this trade in the Excel sheet. That's why I have written the comment also. Trade plan should be by doing position sizing. It's not easy to do position sizing in futures unless you buy more lots. If you are buying 1 or 2 or 3 lots, you can't do position sizing. You can't bear the risk. Only cash segment only you have to plan your trades. Even intraday also, only in the cash segment you have to take the trades, not in the futures. At that time, definitely you won't get 7.7% ROI. Your ROI will be reduced when you do position sizing. Position sizing is not to get the ROI. Position sizing is mainly to reduce the risk and to achieve the RR. Anyway, RR will be same. That's not matter, but to manage the risk. Position size is mainly to manage the risk. Okay, I am deleting this entry. This is because this is not a practical. Zone is worked, but it's not practical trade. But these two are very practical. They are within your risk management. And these two are very good trades. Fine-tuned zones. Perfect trades. So these two are successful trades. This is for zone point of view I was discussing. See how prices are falling. Why? The moment our NeoStock software identified exactly that zone, it took the support and again it started moving. That is the magic done by the NeoStock high liquidity zones. Every time prices are reversing the moment they reach into our zones, high liquidity zones. At least intraday scenario, they are giving you good profits. And remaining stocks, we did not get the trades, but we will see. First one is LIC. This is a daily high liquidity zone. LIC Housing Finance. Rally base rally. I think LIC we discussed earlier. But the only thing I did compare it to the earlier, see, this is today's candle. They didn't enter. But in my analysis, last time when I did analysis, one fine-tuned 5-minute zone, I didn't draw. That is what I did yesterday when I was analyzing these stocks. This was the one high liquidity zone. See how many times it has given entry. This on this candle also, that is on Thursday also, it gave an entry, but slightly pierced. It could be within the stop buffer, and after that it moved and gave a very good return. But below there is one more 5-minute zone is also there in the 15 minutes area, which I don't know what is the reason. Somehow last time I ignored it, I didn't draw. I just want to tell you there is a rally base rally is there. Last time I had drawn this rally base rally, and it was acting as a high liquidity because it is testing multiple times. So this was already tested first time, and then this is second time, this is third time, this is the fourth and fifth on the same day. Okay, fourth time, this is the fifth time, probably the same day. So 5 trade opportunities this has given. And below there is one more fine tune. It is not tested, but prices came near to that and again moved up. So now no more, this zone is, first one is no more valid. I am deleting this. Next time you can plan your trades from here. Okay, LIC housing we already discussed previously, but this is the only one now I'm adding. There is one more below, it is there. Okay, fine. Next is Manappuram daily high liquidity zone. Manappuram also we discussed. So we have rally, 3 base candles and rally. This is having 2 75-minute zones. We have a rally, base, rally. Here again you have a drop, base, rally. These 2 75 minutes again fine-tuned with 15 minutes time frame. So here you have rally, 5 base candles and rally. Here also you have drop, base, rally. And this 15-minute zones are fine-tuned with 5 minutes time frame. Here you have a high liquidity 5-minute zone. We have a drop, you have 4 base candles and rally. And this 5-minute zone is testing again and again. Several times it's been tested. Even here also it is tested. This is on 11th November. So until these high liquidity zones, 5 minutes fine-tuned high liquidity zones, until they are violated, we can plan multiple trades. And here also you have 2 order flows. We have a drop, 2 base candles and a rally, and rally, base, rally. But this candle, see, this may be a large candle, failed ERC. But anyway, still you can draw somewhat, because this is not, maybe medium also. But anyway, this is a rally, base, rally. This is a fresh zone, not tested. Earlier prices came near to and again moved up. So definitely a strong order flow might be there in this zone. So if prices wants to reach up to this level, first this has to be violated, this high liquidity zone. Anyway, today prices did not enter into the zone. Petronet we discussed, Ultratech Cement we discussed, L&T, Mindtree, this is also previously we discussed, or it's a new zone. This is a drop base. This is a daily supply zone, not 75. This is a daily supply zone. We have a drop base drop. This is fine tuned with 75 minutes time frame. Because the entire area is acting like 75, but I think 75 rally, base rally. Somehow I didn't draw 75. But here I planned an aggressive trade setup. There was a 15-minute zone is there, which is not fine-tuned zone. Rally, 3 base candles drop. Why aggressive? Rally base, this 15-minute zone is having a pro gap. Consider this pro gap, and this could be area we can plan an aggressive trade setup. 15 minutes aggressive trade setup, but it is having a fine-tuned 5-minute zone, because that is required. Fine-tuned 5-minute zone is essential to plan our trades and also to manage the risk. Here you have two order flows. See, this is a rally base drop. Let me hide the candle, you will see the real structure. See, this is a rally base. After that you have a drop with pro gap. And also here again this is a leg in base drop. This is also one more order flow, but this is already tested here. Picked up the orders. But even though it is tested, it again created another 5-minute zone. LOTL zones, this one and this one. Generally we take the origin to plan our trades, but here pro gap is there, so still you need to give importance to this rally base drop also, because there is a pro gap. But remember, both these trades are LOTL zones. Generally you need to combine, you need to keep your stop loss here. If the risk is within 2% level, you can plan. Otherwise you need to take a deep trade, deep entry until you get a 2% risk. And also above, little above, there is a trap is also there. We have a rally base drop. Earlier prices came near to the zone and again came down. Probably institutions would have kept a very strong order flow here. Maybe they were preparing in case if this zone is violated, probably your stop loss will hit. Institutions captures all our trades, stopped out trades, and then this will trap, and then it will again push. That possibility is there. So that is the reason why I identified this bull trap. But anyway, today prices, I think prices entered into the zone, but they didn't move up to the fine-tuned area. Let me go to daily time frame. Just entered into the zone, but not up to this fine-tuned area. So that's why we didn't get any trade today. And last one is Metropolis. This is a 75 minutes high liquidity supply zone. Drop base drop. This structure is a very, what to say, not really convincing structure to plan our trades, mainly risk management point of view. See here, it looks like a drop base drop, and it's a very big risk. 15. 5 minutes also similar. That's why I didn't fine tune with the 5-minute zone, because I'm not having any interest to plan the trade. Even if you plan, see here, you have a drop, base, and again a drop, fade, ERC as a leg out. And the body is coming out of the zone. That means same risk is also applicable for 5 minutes also. This much big risk, you can't plan your trades. That's why such kind of structures mostly I avoid for planning the trades. If here any drop based drop is there, I would have planned. But same candle is the leg out for 5 minutes and 15 minutes and also 75 minutes. Same candle. It's not easy to plan our trades. But today prices entered into this area and again came down. See here. Prices came up to this area and sharply prices moved down. And once again during the last hour of the market, at 225 came and again it came down. But when you have such kind of huge risk, you can't plan. In case if it is stopped out, how much loss we get? Very big loss we get. And moreover, risk will be beyond 2%. So that is the reason why, because risk is more, the Ultratech cement also, why we didn't plan our trade, because of that only. And moreover, the risk is only 2.1%. Even then we didn't accept the trade in Ultratech. But if you consider, probably the risk will be some 4% or beyond 4% it will be there in this area, as per one futures margin cost. So you can't plan your trades. But otherwise we got very good fine-tuned zone trades from Shriram Cement and Petronet, and both are beyond our 6%. Have you noticed, especially for the last 2 months, our ROIs are excellent. Most of the trades, they are having more than 6% ROIs we are getting. See here, 8.7 ROA, 20% ROA, 7.3 ROA, 8.3, 7.7, 8.3, 14.6, 11.8. Okay, here these two are for close to 5%. 5.8, that means close to 6. See again here, 9.1, 9.1, 9.2, 6.3 ROA, 10.9, 7.7, 6.6, 11.2. Especially those who are trading high liquidity zones in the month of October and November are lucky people, because you got huge profits, especially these 2 months. But before that we have seen most of the time our ROIs are, especially after the elections, till September month, most of the times our ROIs are around 4 to 5%. Now October onwards, all of a sudden changed. We were getting ROIs beyond 6%. Most of the trades are 7 to 8% ROIs we are getting. See, today also both the trades, one trade is 9.3, another trade is 7.4% ROI. Beyond our average intraday ROI is 6%. So HLQ zones are giving with good performance, they are giving the returns. Okay, this is about our analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.